Peter May.
Developing technology around distribution and pricing.
Advantage, how does that translate in business?
The use of technology in short-term rentals is relatively immature. So we operate in a market that doesn't have a huge amount of data. The access to data is very limited, and so how can we use our own experience and then the different data sources that are available to plug into our pricing tools?
In terms of pricing, obviously, Mr. Alfred, we're quite experienced in that as well, and I agree with you. But there is in pricing, in my opinion, is where the market has invested the most, or at least is more mature in terms of technology.
When you think about short-term pricing and like pricing, for like across maybe up to 3 months, that is, as you say, purely market-driven.
Are you planning probably to fill this gap in the market and try to package the software and sell it to third party?
No.
Hello, everyone. Welcome to a new episode of the Next Gen Rental Podcast. We have today with us Peter May, who's the VP of Operations of Silkhaus, one of the leading holiday home operators in Dubai. Welcome to the show.
Thank you very much, Oriol.
So let's start with the easy question. So what's Silkhaus?
So Silkhaus is a tech-enabled short-term operator. So we convert residential real estate into holiday homes. And we operate across Dubai, Abu Dhabi, and also in Riyadh, with a core focus on technology, both to enable our operations, but also improve the customer experience for our guests.
Very good. So Silkhaus has been in the news quite a lot in Dubai, especially in this industry, because you have fundraised some big amounts for the industry in Dubai, and that I understand that allow you to expand, but also to use technology. No, so how does that differentiate you from a traditional holiday homes operators in Dubai?
Yeah, it's a good question. So I think we're about 3 years old now, and we were fortunate to raise venture capital funding to get the business started. And I think that gave us a lot of advantages in getting started in the market. So we're unique compared to some operators, and we do the lease and sublease model as well as the revenue share model. And I think that was very important in injecting some capital into the market early in Dubai. And then as a second point, as you said, we're able to invest in top talent and also build a technology team, which can build some proprietary tools. So we're also aware that we don't want to build everything, but leveraging technology to build specific things. So like we have our own landlord portal, for instance. We also have a corporate portal, which allows corporates to go and book for their employees. We're also developing technology around distribution and pricing, and we really see that as being our competitive advantage in the market.
So so being your competitive advantage, how does that translate in business? So we can divide it. So for example, in distribution and pricing and channel management, so how that this technology that you have developed impact the business?
Yeah, so I think channel distribution and then pricing are almost separate, but like as I'm sure you're very well aware, the use of technology in short-term rentals is relatively immature. So the kind of off-the-shelf marketware that allows you to link up to many channels is not very well developed. So I mean, your standard PMS may enable some connection with platforms like booking.com or Airbnb, but that's kind of where that automatic connection kind of ends. So there is definitely an element of tech that you have to build to access more of the OTAs, and it's all about getting more eyeballs on your properties. And I think like in particular, that's just in the B2C segment. If you start looking at the corporate segment, there really isn't any technology built around the distribution for that segment on short-term rentals at all. So we do see that as a big opportunity. And then when it comes to pricing and I think we operate in a market that doesn't have a huge amount of data. I think Dubai is somewhat more mature, but then if you talk about markets like Riyadh and Abu Dhabi, they're very immature. Regulation is kind of only a year old. And so the access to data is very limited. And so how can we use our own experience and then the different data sources that are available to plug into our pricing tools So I think that's where you start to really develop a superpower in pricing, which ultimately we hope converts to better occupancy and better revenue for us and also for our landlords.
I mean, in terms of pricing, obviously, Mr. Alfred, we're quite experienced in that as well, and I agree with you. Uh, the industry is quite amateur, but there is in pricing, in my opinion, is where the market has invested the most, or at least is more mature in terms of technology. We have price labs,
Mm-hmm.
we have beyond pricing, we have key data, we have several SaaS in terms of pricing. So how does your tool differentiate from these ones?
So it's not something like it's an ongoing process. I think it's the combination of all of these things. So like we use all of these tools, yeah. Key data for our data. We also use price labs for the dynamic pricing. But for us, it's more about we have different types of properties, yeah, which have different premium grades in different neighborhoods. We also have landlords with different interests. Some might want more flexibility. Some might want to focus on revenue. And so it's like, how do you accumulate all of those different variables into how you price an individual unit? Yeah. So to give you an example, we may see like for longer term pricing, it may meet what we call a rack rate for a neighborhood, but because it's a premium asset, it's not going to meet the landlord's interest. And then at the same time, uh, are they willing to take a 6-month booking in that apartment? So it's kind of like for me, it's how do you bring all of these elements or variables in to price on an individual unit basis correctly is kind of the challenge that I see.
Okay, that's very interesting. And so if we can do a bit of double click here, I'm passionate about pricing and all this. So, um, but Dubai today has, in my opinion, a big challenge on that. No? So we are looking very strong long-term rental prices,
Mm-hmm.
but which is, I would say, the competition where holiday home operators are playing.
Sure.
We compete, so operators compete amongst each other. But there is a huge competition or substitutive product, which is the long-term rental, that in the end, if you do management contracts, that you do some, you compete with. But on the other hand, the pricing is totally driven by the demand and the supply. Has nothing to do with the long-term rentals. No? So how do you include the requirements or the expectations of the landlord, which is the long probably comparing with long-term rentals, with the actual pricing that is driven by a demand and supply? It's a tough question. I don't think there is an answer, but how do you see that?
So I think you have to look at pricing across different time horizons. Yeah. So like when you think about short-term pricing and like pricing, for like across maybe up to 3 months. Yeah. That is, as you say, purely market driven. Yeah. You have to make sure that your apartment is competitive against your comp set within that tower or within that neighborhood. Obviously, you want to always have some kind of acknowledgement of the landlord's expectations, which should be built right on what we believe that unit can deliver. I think as you start to move into the longer term pricing, though, that's where these other inputs become more valuable. And some of the biggest clashes that we've seen is when we're looking at selling long term, and how that matches with the landlord's expectations. Um, so I think that's for me is where you start to incorporate these other elements. Yeah. So yes, it's you look at the market price and you may look at things like the long-term lease. You also incorporate those landlord expectations as well. And generally the longer term pricing has been a much more manual process, right? And also the experience of booking is also much more manual, like you have a reservations team. It's an Airbnb, for instance, like they're starting to open up this segment of the longer term stays. It seems to be the fastest growing segment. They're offering some discount on their channel commission, but still to the large part, it's more of an offline process. So I think there is opportunity to really kind of streamline that process, improve the customer experience, and how can technology improve like the pricing and booking experience, and bringing in these other elements is kind of the secret sauce.
Mm. And then you mentioned also that you saw a big gap in the market when it comes to corporate bookings technologies, and aligned with what you're saying now. are you planning probably to fill this gap in the market and try to package the software and sell it to third party?
No, like maybe at some stage, but in the far future, we will see that there is an opportunity to sell the software. But no, we're nowhere near that. First and foremost, we're building software to improve our internal operations and also improve that customer experience. And when it comes to corporates, yeah, I think the experience is somewhat broken for them in terms of how they can book short-term rentals. So we want to try and make that process as seamless as possible, particularly because it's a very new space. Yeah, corporates have traditionally always stayed in hotels, but alternative accommodation is becoming more prevalent, and there's definitely a cost saving that can be had, and also for longer term stays, I think there's also an experience benefit for employees as well. Obviously, there's things that need to be solved for. Employees like their loyalty points.
True.
But I do think that there's definitely a big opportunity for that segment.
Still, there is a segment of corporate travels that they don't go to Hilton's or Marriott's with the points. I mean, he used to be a consultant, and I was not going to the Hilton's, the Marriott's, and I still prefer to be in an apartment than in a hotel.
Yeah, and I
Experience.
myself, like my previous experiences as a consultant, I remember one project I had in Brisbane, and every week I would be in Brisbane for about 6 months, and I'd try out a different Airbnb.
Exactly.
And it allowed me to see different parts of the city. But in doing so, there was also something broken. There was the lack of consistency in the Airbnbs, and that's something that we're really trying to, both of us are trying to solve for in professionally managed short-term rentals.
Yeah, very good. And then you mentioned that, so going back to these expectations of the landlord, your portfolio, it's balanced, or it's composed by managed contracts and master leasing, no, or subleasing, or depends how you call it. I understand that master leasing, subleasing removes any friction with the landlord.
Sure.
But on the other hand, it needs much more capital, and you need to control the cash flows and the contracts. So how do you see the two? Because there is no many companies that have the two elements within their value proposition. So how internally, or you yourself, how do you see these two ways of contracts, and what do you think is the pros and cons of each one?
Yeah, so look, I think as I mentioned, when we started as a business, having the firepower to be able to lease and sublease, it definitely allowed us to really get kickstarted in the market. And I think we will continue to use that model as we explore as part of the expansion strategy. Yeah, I think it's kind of a chicken or the egg type problem. Like you get to a new market and you're trying to convince a landlord to work with you, but you don't have any apartments. So I think it's a really great strategy to get started in the city. Look, I think it depends also on the type of market, and ultimately we are shifting, and over time we will have a larger percentage of our portfolio that is the management contracts, that we call them revenue share agreements. And that is because it's a more capital light, and in particular, like where Dubai is our largest market, which is very seasonal. We want to really kind of, if we think about profitability, making sure that our contribution margin is positive during the summer period. It's very difficult to do that with a heavy leasing portfolio. And so, yeah, look, we'll continue to lease. I think it gives you much greater control, and it's easier to manage. So like when you think about a higher percentage of a portfolio being on short term, there is that element of like account management and dealing with landlords. And also I think a lot of the technology that we're building is focused on landlords as well. So there is definitely a higher cost to serve that goes with these revenue share. But yes, it's a more capital light model, gives us greater agility, and I think it supports with profitability, particularly if you're trying to manage for cash flow in highly seasonal markets.
And I think there is also an element of CAC, of cost of acquisition of the client as well, no? I guess, especially in such a competitive market of Dubai, the marketing cost, the business development cost of going after revenue share are much higher, at least than when we started 8 years ago in the market. Whereas for subleasing or master leasing, there is no CAC apart from the Asians.
The brokerage fee, which is not insignificant at all. Yeah.
True.
I mean, and that's why, like, I think if we have opportunities to lease rather on a larger scale,
Exactly.
rather
Developers or
yeah, and I think
the offices.
particularly in a market like Dubai, what we're seeing now, where the leases are starting to increase in value, if we're able to lease at a bulk scale and then get some
Maybe 5 years or longer.
yeah, get some discount on pricing as well, then I think that's where it really has a strong kind of profitability opportunity.
That makes sense. So today we are in a beautiful 3-bedroom apartment operated and managed by High Guest, one of the main clients of Mr. Alfred, in the beautiful island of Imar beachfront. It's a 3-bedroom apartment plus maid with 3 bathrooms. It has very modern and beautiful finishings. Go to mr.alfred.travel to book this apartment and many others in our portfolio. And then you mentioned also technology for the operations. So can you also share a little bit with our audience which type of technology you're building or using in your operations?
Yeah, so look, I think as you're like, there is a multiple softwares that are required to operate a short-term rental effectively. And we use, I think, like our CRM tool we use is HubSpot, and these CRM tools are kind of, yes, they are on off the shelf, but you tend to customize them to the extent that they become your own. Yeah. So we've been, I think what we're doing is like not only using it for the sales side, but also leveraging it for our, like we have a transformation pipeline, we have our churn pipeline all through HubSpot, which allows us to move through the different stages, and we have notifications to the team. So that I think definitely supports operations and better visibility.
Customer service management.
Yeah, and we will also, like, and one of the things we're starting to do now on transformation is we will reflect that transformation flow on the landlord portal. So when we sign a landlord, they'll get immediate access to their portal, and while their property is not live, they'll be able to see at what stage it is in the transformation journey up until the point it goes live, which I think my hope is that actually it reduces the communication requirement on our account management team and improves their experience. The other tools we use are things like Breezeway to manage like our field operations, our cleaning, our maintenance. And I think we can definitely be leveraging those tools more. But we're starting to get there, and I think that provides great visibility. We're building dashboards behind that to show kind of like, the completion rate of certain tasks. Also, like for cleaning, like the check-in times, the check-out times, so that we can it also improves our control. And then like there is different, like I think in finance, there's great opportunity around like utilities. So we're looking to really leverage technology. How can we better manage, as I'm sure you're aware, like paying utilities for, particularly if you have individual accounts for your like Do or Etisalat, is an absolute nightmare. Yeah. So if there's ways that we can improve how we make payments for utilities, that's definitely something that we're also investing in. So I think it's where we see the greatest friction, and then we're trying to see how technology can help solve some of those challenges.
So what you described is more a structure, an approach, and an operational focus from a corporate level, more close to startup, a tech startup, than a wholly home operator. No? So, I mean, it's amazing to see that, because we don't see much sophistication on corporate process and everything. So what is the focus internally? I mean, try to share more things about how is the structure internally in Silkhaus from a corporate perspective that allows for you to focus on metrics, on IT. So you have several departments, or you have
So I mean, once you start, and I've seen this kind of transition. Like I joined the business when I think we were maybe 150 or so apartments, and like I think you're almost already over that hump. But like as an operator, you can tend to operate a certain number of properties. Maybe it gets up to about 50, with a very lean team. And it also, I think you see some very good profitability as well, up until that kind of limit. But then I think the profitability curve it kind of drops down, and then you really have to start like leveraging scale somehow to kind of get you out of that valley. Um, Look, as you mentioned, we have backing from venture capital, and so we've been fortunate to put in place like a very higher top talent, put in place a very strong team structure um, that we believe will enable us to be, I mean, starting off with the region, like one of the top short-term rental brands, and then hopefully, one of the top short-term rental brands globally. And so we have that aspiration. It's not like a lifestyle for us, which I think we see with a lot of operators, and that's completely fine. Yeah, there's nothing to be said against that. But with the aspiration that we have, uh, we're putting in place these types of structures for the long term. And I think, when we look at profitability, it's across a time horizon. It's not like immediate. Yeah. And I think cities will take time to be profitable, and that's completely fine, because we acknowledge that, our overheads are going to be larger than other organizations, because we want to build the right structure, the right brand, the right systems, processes, use the right technologies, to enable us to manage properties at scale with with high experience.
So you mentioned about the vision of being global, but we have seen recently, especially with Sonder and Bacasa going public and losing 97% of their value.
Yeah.
And with other experiences in the past, that it's not easy to build a global player in this industry that can mirror the likes of Hilton, Marriott, or the big hotel chains. So why do you think maybe other brands, because we have Sonder who did master leasing, and we have Bacasa that is doing a revenue share as a general business model. So why do you think this, why do you think these companies haven't succeeded? I mean, of course they succeed because they're big companies and big revenue, but they haven't succeeded to confirm, to convince the market, the public market, that there are companies like to be for forever in the market. And first, why do you think these brands didn't succeed, and why do you think Silkhaus can't?
So I think they both listed through SPACs is what I understand, which I haven't seen many examples of SPACs being successful.
That's our apart from the one who led the SPAC, right?
Yeah, exactly. And then I think, like, look, when you think about their valuations or how they position themselves to be listed, they were positioned as technology businesses, and I think that is a little bit of a falsehood, right? Like, yes, they're leveraging technology, and tech enabled operator is probably at the right. The point I'm trying to get to is that the multiples that they were listing at, or even in their private valuations, were not reflective of their business. And so I think, like, as soon as it went into the public markets, that correction took place. The second part, I think, is that they generally kind of got to that position during a period where money was relatively cheap. Yeah. So people were able to raise money quickly, and look, raising money quickly, is great for a business, but it causes its own issues. Yeah. And I think that they tend to grow too quickly, you take on too much risk. And so now when money's become harder to come by, it's forced these businesses to lay off people, and have these kind of corrections. So that's my position on those two businesses. I think, though, they still, I mean, particularly like the experience they provide is a good one, right? And I could say the same about WeWork, for instance. Like, WeWork is an incredible experience as a user, yeah. Um, so I think that, like, our position is that there's definitely space regionally and then globally for there to be a brand in short-term rentals. Yeah, that much is clear. I think how the business is growing is particularly important. Yeah, like and with a focus on profitability, and then like if your investors and the public are aware of the type of business that you're operating on, I think that, look, we're not in a business that can offer 20x multiples. That's fine, and that's okay.
Yeah, that's okay. Exactly. No, and honestly, I agree with you. What I mean, easy money creates sometimes dumb organizations, right? Because if
Exactly.
you need to fight for anything or look at the margin or profitability of things, you just make decisions without thinking them properly. But also there is another element, in my opinion, which is the unit economics. I mean, there is valuation, and I agree with you, tech versus non-tech, multiples and everything, but the unit economics of Bacasa and Sonder or WeWork, they don't add up. I mean, you had negative contribution margins, and with that, it's impossible to grow.
True.
But anyway, I understand that you learn from that, and you and you will solve it, and you create an organization that is it's much more robust, no?
Yeah, and I mean that's our hope, right? Like, and having a very early eye on profitability is important.
Since started in a market like Dubai, it's easier to be profitable in the unit economic side, in my opinion, than other regions where
Yeah, high
operational
propensity to pay, lower cost of operations, for sure. I agree. Yeah.
very good.
Let's take a moment to thank Mr. Alfred, our sponsor. They're not just a property management system. They're a comprehensive solution for vacation rentals, offering everything from dynamic pricing to efficient marketing. Their intuitive platform simplifies operations so you can focus on growth. Excitingly, Mr. Alfred now offers a free light version, including a channel manager with connections to over 60 OTAs. To learn more and to start streamlining your rental business, visit mr.alfred.com today.
So Dubai, how do you see Dubai? There is a lot of talks about the long-term rental prices, oversupply. Yesterday we were in an event where DTCM, I don't know if I can say that publicly, but anyway, there is a lot of licenses. Yeah, more than 25,000 licenses in Dubai. So how do you see the market today and the next
Yeah.
12, 2 years?
So you say Dubai is an easy market to make money. It's not. Yeah.
Yeah.
I think so. Look, I think the challenge in Dubai, what I've seen probably over the last 6 months, and summer in particular, we're seeing demand, like supply growth is outpacing demand growth. And as a result, we're seeing constrained RevPARs. Yeah. So I think that is the biggest that is the biggest challenge for the market in Dubai. Now, there is a world where, I mean, the market will correct itself. So I'm sure at some stage we will see an element of consolidation. There's also an argument to be made whether or not the regulator should also play a part in that. There is very little barriers to entry to setting up a holiday home in Dubai. Now, if we want to make sure that experience and quality is the focus for guests staying in short-term rentals in Dubai, potentially there should be some level of control on that. Yeah. But I think that the reality is we're also going to see a lot of stock come onto the market probably across the next year and 2026, which is and a lot of that is going to be from investors who are looking at their options, long-term or short-term. So I think that the supply is going to continue to increase, at least in the short term. So for us, I think it really depends on where that supply is. Yeah. So how our focus will be in Dubai, we'll be quite cautious, I think, about taking on more leases, just because the contribution margin requirements have become a bit more challenging. And then like very focused on where we know that we can beat the long term, and pushing our like marketing efforts on supply there for the revenue share model. And there is still definitely pockets that really deliver and are great options. And then flexibility is a major kind of selling point. Yeah, like the property market is hot, which is also good for us. Yeah, like people want to sell or have an opportunity to sell, and if you're stuck in a long-term lease, it's a lot harder to do so.
Yeah, I think the market, in my opinion, the market will shift into this, into like conveying the value proposition as flexibility, as diversification of the portfolio. I mean, if you are a large investor, you don't want to have all eggs in the same basket of the long-term rentals. And I also tell the investor, I mean, yeah, maybe today, November 24 is not the best time in terms of ROI for the short-term rentals. But if you would have, you wouldn't have trusted the market 3 years ago when we had the same levels of ROI, you would have missed the best 3 years of short-term rental in the history, you know? So
Yeah.
So sometimes it's not about the last 12 months of the today ROI, it's also about the 3 to 5 years ahead of you.
Yeah.
And in my experience of being 8 years in the market, in a 3 to 5 years window, short-term rentals it has been always better than long-term rentals. And if you are an asset, you pay a lot of money. So you're going to make financial decisions based on 6 months, the last 6 months and not 12 months. No? So there is an element of education, in my opinion, in the market that we need to do all the industry. And then the second thing is how we balance also the element of flexibility in terms of 6 months, 3 months, 9 month leases that can pay a part. But then you need to have an organization and a cost structure that is adapted to this market where the margins are lower.
Mm-hmm.
And then the third one that I don't know how it's going to be evolving is what you say about different areas. No?
Yeah.
And I believe profitability is higher in non-premium areas in Dubai than in premium areas. So maybe that will balance also the supply and demand in premium areas, and premium areas will become more profitable. I don't know. But if ADRs in non-premium areas are lower, also the profitability is more challenging, no? Because your percentage is of a lower. So it's I don't know. I think we're in a challenging time, but it's fun.
Yeah, I agree. Like, I think, and being able to survive this period, it will provide a lot of opportunities. Like I said, I think that there will definitely be consolidation, and that will provide great opportunity for the ones that are still going strong as we kind of get through this period, and things will change, right? I think like the other thing is from a macro perspective, you've got a very hot local market, with a strong economy, and people are moving here, they're seeing good job opportunities. Whereas the global market's been a little bit soft, right? So like the lower propensity to pay. And so if that kind of swings, and we see a stronger global economy, I think that also that will also kind of support the short-term rental industry here.
I agree. And also there is another element that I think it's also relevant for you, which is Saudi, no? That's a Saudi is going. In the last episode with Siddiq, we discussed about Saudi and this controversy, but this comparison between Dubai and Riyadh, whether Riyadh will ever compete with Dubai, and he was very strong in saying, hey, no, Riyadh, the growth of Riyadh or the growth of Saudi will complement or will push Dubai to grow as well, no?
Yeah, for sure.
I think it. And so Riyadh, so you are in Riyadh as well. How do you see your experience how's your experience in Saudi operating short-term rentals and the vision in the country, because it's a huge market, especially in terms of growth potential?
Yeah, look, I think the opportunity in Saudi is clear, right? It's a massive market. It's a big city, 8 million, sort of, or slightly larger. So I think and I mean, there's a big regional push, I would say, like for businesses setting up their regional headquarters in Riyadh. And so, look, it's buzzing, yeah. But at the same time, I think that our initial kind of experience has been a little bit challenging. Yeah? I think that it is a very immature market, so regulation is still kind of is very much trailing compared to Dubai, and clarity around that regulation isn't super high, and that's something that we're continuing to work on. And then at the same time, we've seen like the stock that's available in Riyadh is very different. Like, I mean, we're sitting in a beautiful apartment here in Marina Vista. The availability of supply that is like this in Riyadh is very, very limited. Yeah. And there's only so many towers, for instance. There's a lot of this 3 to 4 floor kind of buildings across all of Riyadh. And most of it is larger format. Yeah. So 3 bedrooms is the norms compared to your studios and 1 beds. So finding that smaller, like the 1 bed stock is a lot more challenging. And then I think the demand for the larger stock isn't as high. Yeah, if you think of the type of travel that we're focusing on and business being a key segment for us. So look, I think we're still learning a lot in Saudi. But I think that any business that wants to really operate in this region, in the GCC, has to be in Saudi. Yeah. It's by far the largest opportunity. And I think like even if we think of ourselves as a global player one day, we can build $100 million business that's just in Dubai, Abu Dhabi, Riyadh, and Jeddah very, very easily. Yeah. So we're invested in figuring it out.
Yeah, as a matter of fact, the hype around Saudi has generated, in my opinion, the need for companies to have Saudi in their map, flag, for brand value as well. You cannot, as you said, you cannot be a regional company or a Dubai company that pretends to be global without Riyadh now or without Saudi, in my opinion. So even if it's not profitable, sometimes you need to invest for the brand value and the company value.
Without a doubt. Yeah, I think like it's important to be in Saudi.
Very good. So we're reaching an end.
That's it.
Yeah. No, time flew. Yeah. I always ask a question, which is, where do you seek inspiration, or do you watch podcasts that you can recommend, or any book, management, or for industry? I don't know, industry. Anything that you say, look, when I want to learn something new, I go here to find my source of knowledge.
It's a tough question. I'm not a huge podcast guy, but like there's definitely some staples that I tend to follow. I like reading. My background is actually in engineering, so I studied chemical engineering. So I like most of the business kind of skill set I've either learned on the job or through various like sources. I think like a book that I just finished recently, this guy Shane Parrish, I listened to his podcast. I think he also has a blog called the Farnham Street blog, and he's written a book called Clear Thinking, which is quite a nice little toolkit how you think about making decisions. I think for me personally, decision making is something that I continue to work on, and being decisive is something that I've challenged myself to be better at. So I think that's a good example of something that I've read recently, and he has a podcast as well that I listen to relatively frequently.
Very good. So thanks for joining us again. I think it was a very nice conversation. I enjoyed it, at least. And and for everyone, let's see you in the next episode.
Awesome. Thank you very much, Oriol. It's a pleasure to be part of it today.
Thank you. Next Gen Rentals is brought to you by our main sponsor, Mr. Alfred. Mr. Alfred specializes in making vacation rental management effortless.